All right, you guys, thank you so much for tuning in for tonight's, tax, I guess you can say, primer for all the, vocal artists out there in not only in the Chicagoland area, but also, I guess, worldwide, because you guys are all over the place, right? So my name is Stephen Lee, and I am a CPA out of Chicago, Illinois. And my firm is located down in the city, but I also have, more excitingly, a YouTube channel. And that link is actually the channel tag or the channel handle is Simply Tax, which is SIMPLEETAX. So you got my last name in the middle there, Simply Tax. And on that channel, just a quick plug, I have a lot of great tax videos for all of you to just tune in and be able to watch. A lot of it's geared towards both independent contractors, which are a lot of vocal artists like yourselves, and also for people who are W-2 employees, right? And we are going to go over both tonight, okay? But mainly we're going to focus in on independent contractors and what that means, right? So just to kick it off, we have a list of questions here. And during this live stream, you can submit your questions as well, okay? And then one of our members of the CVAC will probably ask me that question towards the end of the presentation. So please submit your questions. All right, so just to kick it off, the first question is, what is the difference between W-2 income and self-employed income? So that means W-2 versus 1099, right? The biggest difference is that when you're a W-2 when you receive W-2 income, that means you're an employee, okay? And as an employee, your employer will be withholding taxes from each and every paycheck, okay? Versus if you're an independent contractor, you'll receive a 1099. And what that means, it's a Form 1099, okay? So a lot of people use that term independent contractor and 1099. Those are the same thing, okay? Think of those as the same thing versus employee, you'll receive a Form W-2 at year end, okay? Not a 1099. So there's W-2 and there's Form 1099. And the most important thing, like I said, is that with a W-2 or as an employee, all taxes are being withheld from each and every paycheck, okay, by your employer. But if you're 1099 or independent contractor, you have to withhold taxes on your own, okay? Which is kind of shocking and surprising for most people when they first become an independent contractor, that they're usually not aware that they have to withhold federal income tax, state income tax, self-employment taxes, right? So there's 3 levels of tax as an independent contractor that you have to be aware of, okay? And this question kind of leads into basically how much should you save if you're an independent contractor and you are just receiving pretty much cash from whoever's hiring you. How much should you save for taxes, right, from each and every paycheck? Okay, and this is there's no magic number here. I just want to preface that there's no magic number because everybody has a different tax profile. But what I definitely recommend to independent contractors or people who are starting off is somewhere between 25 and 35%, okay? So that's saving from each and every paycheck 25 to 35% of anything you receive from a client, okay? So let's run through a quick example. Okay, let's say you are paid $1,000, okay, for a project or performance that you just did. What I would say is I would recommend you save between $250 to $350 from that $1,000 that you receive for payment for performing, right? So 25% to 35% is kind of the range I tell you. And if possible, I would actually recommend more towards 35% because at year end, let's say you saved up a lot of money for taxes and you only needed 25%. That remaining 10% is actually savings, right? Where you can use for things like just sustaining yourself, because I know as a performer, and we talked about this before, is that income is very unpredictable many times, right? That you need to have that emergency fund or that savings of that 10%, that little cushion, right? So that you're not reaching into or going more into credit card debt, things like that. So by saving a little bit more throughout, the year from each and every paycheck is just going to help you to succeed in the future, keeping you out of the crosshairs of the evil credit card companies out there, right? So definitely 25 to 35% if you're an independent contractor from each and every paycheck. Okay. This goes right into the next question of, let's see here. When do I pay or submit these taxes, right? So when do you submit the 25 to 35% that you withheld from each and every paycheck? There's something called quarterly estimated tax payments, okay? Quarterly estimated tax payments. And the name is a little bit deceiving because the deadlines, which I'm going to go over right now, there's 4 deadlines throughout the year. They're not spaced every 3 months like you would think, right? Intuitively, you hear the word quarterly and you would think, okay, every 3 months, that's when the deadline is, but that's not the case, okay? So the 4 quarterly estimated tax payment deadlines are, the first one is April 15th. So basically when you're filing your income tax return for the previous year, April 15th is also Q1 or the first quarterly estimated tax payment due date, okay? So April 15th, okay? The next one is June 15th. Okay, the second quarterly estimated tax payment due date is June 15th. The third is September 15th. Okay. And the fourth is January 15th, okay, of the following year. Okay. And so when you take a look at those, we realize it's not every 3 months, right? Because you have April, then June, and then from June we jump to September, and then from September we jump to January, right? So it's not every 3 months. So what you have to be cognizant of is the fact that there are these deadlines, and you want to submit your quarterly estimated payments on time. Because if you don't and you wait till, let's say, the 4th and the final payment of January 15th, you're actually going to be charged by the IRS penalties and interest for late submission of those quarterly payments that you should have been making, April 15th, June 15th, September 15th, and January 15th, okay? So you will be penalized if you aren't submitting these payments on a quarterly basis, right, or on those deadlines. And, okay, go ahead, wait, a question?
Yeah, can we just be asking questions?
Sure.
So, yeah, I have a question. So what if you were not expecting to have to submit quarterly payments?
Sure.
But then in the very last quarter,
okay,
you had a lot of 1099 or self-employment income.
Okay.
Then you go back and add all of your 1099 forms from previously in the year.
Gotcha.
Are you still going to expect it to be
penalized? Oh no, great question. So the question was basically, let's say there's a big windfall of income at the end of the year, right? Instead of January, February, March. And I know that now holiday season is coming up, right? For a lot of vocal performers, a lot of church events, right? A lot of religious events where you will be hired to sing, right? And sometimes December, this holiday season is, it's kind of like Christmas, for vocal performers, right? A lot of income does come in. So what do we do? Are you penalized? The question is, are you penalized for earning a lot more income at the end of the year and not submitting equally throughout the year, even though you had a big windfall of income? The answer is no, you won't be penalized. And the way you do this is when you file your income taxes, there's a thing called annualizing your quarterly estimated tax payments, okay? Annualizing it. So that basically when you go in, by default, the tax program or the tax software is going to try to splice it up into 4 pieces and being like, okay, let's say you earned $100,000 during the year, the computer, and I got some laughs from the crowd here, but let's just imagine, okay? Let's just imagine here, let's just imagine here, okay? Let's keep okay, let's go, okay. So let's just imagine $100,000, okay? You earned $100,000, okay? What the computer software or TurboTax will do is they're gonna basically simulate how much tax you should have paid. $25,000 for the first quarter, $25,000 for the second quarter, annualize it, right? They're going to splice it into 4 pieces, and they're going to try to calculate the penalties and interest that you should have paid because you should have submitted quarterly estimated payments on $25,000 each quarter, right? Equally. But that's not the case because as singers and performers, the income is very unpredictable, right? So what you need to do is you need to go into the software and you need to search annualizing your estimated tax payments, and then you have to give the software, you have to tell the software you earned maybe 60,000 in the fourth quarter, not just 25,000, right? So you tell them basically how much you earned out of the 100,000, in each and every quarter. So you have to tell the software that. If you don't, it's going to just assume by default that you should have submitted payments or tax payments equally over 25,000, 25,000, 25,000, 25,000. So that's a great question. Another question.
Yeah, how do you even know if you're supposed to pay quarterly?
Okay. Okay, so the question is, how do you know you have to pay quarterly estimated tax payments? Great question. It's easy. So the default is if you earn more than $5,000, okay, that's like kind of the baseline figure that I give my clients is $5,000 of income during the year. You're going to be required to submit quarterly estimated tax payments. And the reason why I say $5,000 is because by law, the IRS requires you to pay quarterly estimated tax payments if you're estimated to owe more than $1,000 in taxes for the year. Okay, so if you do the math here, let's say you're like in the 20% income tax bracket or 25%. So if you earn $4,000 of income, already you're probably going to be owing $1,000 worth of taxes, right? So that's why if you're earning more than $4,000 or $5,000, then I would say you're probably liable for quarterly estimated tax payments, okay?
And is that gross or net? Because there's a bunch
Sure.
of expenses. So I may earn $1,000 on a gig,
Okay.
but I spend 600 of it
Right.
on expenses, so I only net 4.
Okay. So it's on the net. Okay, so you're right. So the government will only tax you on your profits, okay, not your losses, right? Because that'd be really painful if they're taxing you on losses, right? You didn't earn any income, and they're gonna tax you on that as well. So, yeah, right. You never know, but it's gonna be the net. It's gonna be the net is where you owe taxes on. Okay, so if all your expenses outweigh basically your income, you won't owe any tax. Okay. But most likely, if you're living off being a performer, I would hope that your income outweighs your expenses, okay? So you're going to be paying tax on the net amount, not the gross amount, okay?
Yeah, so does this apply, this like $5,000 rule apply if you have a regular job from which you derive most of your income? So like, for example, I have a W-2 job.
Sure.
Where I make most of my money.
Okay.
But I also freelance a lot and I gig a lot.
Right.
So even if most of my money is coming from a W-2, if I'm making $5,000 from freelancing, I still have to file quarterly tax.
Yes,
Okay.
because the $5,000, that's kind of like this is basically after deductions and all this stuff. But the question was basically, what if you have mixed income, right? What if you have W-2 income, which is employee income, where taxes are being withheld already from that employee income, plus freelancing or independent contractor 1099 income, which most performers do have, right? We know that we have a lot of performers who have a 9-to-5 job or something, or teach or do something, or I have a client that works at a restaurant full time, right? And he earns W-2 income, right? So what if you have mixed? That's a great question. If you earn $5,000 for singing or 1099 independent contract, yes, you'll probably still owe over $1,000 worth of taxes at year end. So you should be submitting quarterly estimated tax payments. Okay, so that's why going back to the 25 to 35%, that benchmark there just really helps you not only save for taxes, but also to give you a good ballpark and accurate figure of what to submit each quarter, right? Because doing that calculation is fairly complicated. If you want to get it to be as accurate as possible, it's a fairly complicated calculation, which I use actually like software, like tax software to do that. But I guess like the quick and easy way to do it is to use that percentage, right? Because at the end of the year, let's say you paid more in taxes. That's where a refund comes into play, right? You'll get all that back, okay? So it's not like you're paying more and the government will just take it. When you submit your tax return, you're either going to be in a tax owe position or tax refund position, right? You're going to get that back anyways. And like I said, you can see that as kind of like indirect savings, so that when that rainy day fund or when you need money when the performances aren't coming in, then you can use that reserve basically. Okay.
One more.
Another question? Yeah.
What's the best way to make a quarterly?
Okay. So the question was, what's the best way to make or submit a quarterly estimated tax payment? I would say online. Okay, so the IRS, you can make it off the irs.gov website. You can submit your federal quarterly estimated payment through their irs.gov website. And number two, for states, for Illinois, you can also submit your Illinois quarterly estimated tax payment through the Illinois taxing website. Okay, so all you got to do is hit Google search Illinois Department of Revenue, right, and it'll take you to the website, and you follow the prompts. And I'll admit the websites are not that pleasing to the eye. They're not easy to navigate, right? But if you search and you work hard enough, you'll find it. You'll find which tabs and buttons to hit. And if you have any questions on that, I will leave my email address in the bottom. Just, and I send the link and I send the step-by-step approach to a lot of my clients when they submit quarterly estimated payments. So once you do it a few times, you'll be pros, right? You'll be pros at doing it. It's just all about saving and submitting those payments. So online is the preferred method that I recommend. Okay, question.
Earlier you mentioned that there was a federal, a state, and then a self-employment tax. So the self-employment tax is included in the percentage, but then which one do you pay that to, the federal or the state?
Great question. So the question was basically, when I first mentioned in the early part of this presentation that there are three types of taxes we're looking at: federal, state, and self-employment taxes, right? The question was, which portion, is it in the federal or in the state, does a self-employment tax fall into? It's actually the federal, okay? So when you submit your federal payments, or let's say you're only performing in the state of Illinois, okay? You're only gonna be submitting to two places for your quarterly estimated tax payment. That's the IRS, that's the federal side, and then the state of Illinois, which will cover your Illinois taxes, okay? Self-employment tax is part of the federal, the IRS portion that you're submitting, okay? Any other questions with that? Okay. The second question, moving right along, is what expenses are considered deductible work expenses, right? And this is kind of like the $1 million question, right? What can I deduct, right? Because you want to be able to deduct everything and anything possible, right? That's legally possible, right? But yeah, so basically the baseline is the expense needs to be both ordinary and necessary, okay? So when you run through that, ordinary basically means that it's common, okay, in your industry, okay? So, and then necessary means that it's not extravagant, right? You're not going over the top, right? But that baseline rule for necessary is different for every industry.